Hey, welcome back everyone. This is Uncle Frank and I am not a financial advisor, nor is any of the content to be construed as financial advice. This channel is for entertainment purposes only. And here's the headline many of you have been waiting for. 5 U.S. banks face billions in losses as silver's price spike hits short sellers hard. Silver prices have experienced a significant increase, rising over 6% to exceed $33.60 per ounce. This unexpected surge has put 5 U.S. banks at risk of substantial financial losses due to their large short positions in the metal. What happened? The recent spike in silver prices has led to potential losses for these banks, estimated at billions of dollars, according to a report by the Silver Academy. The CFTC reports that open interest in silver futures contracts has reached 141,580 contracts, each representing 5,000 ounces. This amounts to approximately 707.9 million ounces, nearly equaling a year's global silver production, with silver prices increasing by $1.84 per ounce. These short positions are now estimated to be underwater by $1.3 billion. Quote, this behavior undermines market integrity and could have far-reaching consequences for both the financial sector and industries that depend on stable silver prices. The concentration of these short positions among just 5 U.S. banks has raised concerns among industry analysts. Critics argue that this level of short selling artificially depresses silver prices. No, despite strong industrial demand from sectors like electric vehicles and solar panels. Concerns about market integrity and potential supply shortages have emerged, with some fearing a sharp price increase could force banks to buy back large quantities of silver, leading to significant losses. You silver bugs will appreciate this one. Investing legend Jim Rogers expects an extremely bad recession, why he's buying silver instead of gold. Jim Rogers told MarketWatch during a Zoom interview this week the U.S. economy is getting closer to suffering an extremely bad recession, one that'll lead investors to seek out precious metals. But the veteran investor said he's more likely to buy silver than gold as a way to hide from the economic turmoil. History would indicate we're getting closer to a recession, but I don't know when, said Rogers, chairman of Beeland Interest Incorporated, who co-founded the legendary quantum fund with billionaire piece of shit George Soros in the 1970s. I do know there's going to be a recession again. I do know it's going to be extremely bad. He believes America's never gone this long without a recession in its history, and it's overdue for more economic problems. Quote, if we're going to have serious economic problems and more money printing and more inflation, then silver and gold will be a place to hide again. If you were buying one today, you'd probably buy silver because it's down from its all-time high and gold is near its all-time high. As you all know, this is not investment advice, and I'm not an investment advisor. I will never tell you to buy, sell, or hold any security or cryptocurrency. But I wanted to mention specific strategies in general to protect yourself in uncertain times like these when the indexes are at or near all-time highs and you see trouble or volatility on the horizon. It's easy to forget you have other options than just buy, sell, or hold. You could learn to hedge your positions with options, or you can lessen your exposure on a profitable trade by selling some or half of your position, or you could just sell enough to remove your original investment and let only the profits continue the ride. For example, this investor, Bodan, is a Palantir investor. He writes, time to get out. Palantir stock has surged to all-time highs. prompting me to sell half my stake due to valuation risks while holding the rest for long-term potential. I recommend new investors wait for a pullback before buying, as current prices are too risky given the company's valuation. Palantir remains a strong company with growth opportunities, but I'll reconsider a buy rating if shares drop closer to 30 a share. Okay, maybe you agree with him, maybe you don't. Palantir had a good day, finished at 43.56, up 97 cents or 2.28%. But more importantly, it's up 162.73% year to date. They had some exciting news, a new AI project with a new partner, L3 Harris. But then you read in Yahoo Finance that Jim Cramer's bullish on Palantir, but is the stock's winning streak too hot? Well, depending what your long-term goals are, you do have options. You could continue to hold the stock and buy puts to protect yourself to the downside. And you could even pick an expiration date that protects you past a troublesome forward event, like the upcoming election, for example. Or you may choose to go out even further. You could sell 25% or 50% of your stake, or sell just enough to remove your original investment. You could even sell some of your position and buy puts for insurance. The only advice I can give without getting into trouble is you should formulate your strategy before any potential crisis arrives. Well, you knew I'd have to mention this one, Tesla earnings. Wall Street weighs in following monster quarter. Tesla stock rocketed higher on Thursday on the back of several positive disclosures from the EV maker in its third quarter report. From a Q3 profit beat and improving margins to an improved growth outlook, cheap EV update, and robo-taxi rollout, there's plenty for analysts to chew on for a company whose shares, even including today's big move, are only up 2% for the year. Bank of America's John Murphy upped his price target on the back of Tesla's strong quarter. The stock finished today at 260.48, up 46.83 or 21.92%. Tesla's best day in over a decade leads NASDAQ and the S&P 500 higher. The S&P closed at 5809.86, up 0.21%. The Dow finished at 42,374.36, losing 0.33%. NASDAQ 18,415.49, gaining 0.76%. Crude oil over 70 at 70.33, and gold lost a dime to finish at 2748.80. It looks like I'm not the only guy worried about this rally. On your screen is the action on the 10-year Treasury yield over the past month, which finished down 0.026 at 4.217. Now, is it just me, or has this thing been heading in the wrong direction? Keep an eye on this one. Look, I hate electric cars, but I love EV tolls like Archers and Jobys, so I'm reporting on this. Massive lithium deposit found under southern U.S., projected to meet global demand by 2030. The United States Geological Survey said Monday that there may be an enormous lithium reserve buried in South Arkansas's Smackover Formation, an extensive limestone aquifer hosting large volumes of mineral-rich brine. As much as 5 million to 19 million tons of lithium could exist in the form of underground brine, salty groundwater enriched in dissolved lithium. If commercially recoverable, the amount of lithium present would meet projected 2030 world demand for lithium in car batteries 9 times over, according to the USGS release. Well, that could work out, right? And breaking Thursday afternoon, Joby, a company developing electric air taxis for commercial passenger service, announced today that it has launched an underwritten public offering to sell up to 200 million of its shares of common stock. In addition, Joby intends to grant the underwriters a 30-day option to purchase up to an additional 30 million of its shares of common stock. Joby currently intends to use the net proceeds that it will receive from the offering, together with existing cash, cash equivalents, and short-term investments, to fund its certification and manufacturing efforts, prepare for commercial operations, and for general working capital and other general corporate purposes. Joby closed at 604 today, down 20% or 3.21%, but in the after-hours session, at the time of this recording, 554, down another 50 cents, losing 8.28%. This is just making me sick. For over 3.5 years, I was gang raped by Wall Street and AMC while Adam Aaron held me down and the SEC watched. Now I have to deal with this bullshit. The SEC requested a new deadline for its lawsuit against Ripple. In the latest filing, an appeal deadline may be extended into early 2025. Stuart Alderoty, Chief Legal Officer at Ripple, has noted that the appeals will not overturn the decision that the XRP sale did not fail the Howey test and did not create an unregistered security. Alderoty also believes the SEC is still trying to enforce compliance despite losing its case on the security status of XRP. The SEC has been on a regulatory spree with multiple lawsuits filed against crypto startups of various sizes. The Ripple case is just one of the high-profile cases, underscoring the overall drive of the regulator to limit the activities of crypto companies. Meanwhile, the SEC lets Wall Street types like Ken Griffin run wild. Hopefully Trump is elected, Gensler is fired in January of next year, and we could move on with our lives. Maybe that $10 million payment to the Harris campaign sealed the fate of Goober Gensler. Stay tuned. Now let's review the BRICS summit. BRICS gathers pace as shared grievances with West fuel alliance. As U.S. election jitters hung over this week's meeting of global finance chiefs in Washington, a smiling Vladimir Putin was in the Russian city of Kazan, welcoming leaders of countries which together make up nearly half the world's population. The BRICS club of emerging economies may be a long way from rivaling the International Monetary Fund or challenging U.S. dollar dominance, but the first summit with its new batch of members showed clear signs of its growing weight. The final communique was long on words and short on detail about creating new payment and trade mechanisms which could bypass Western-dominated structures, including, notably in Russia's case, sanctions imposed after its invasion of Ukraine. But yet just yesterday from Bloomberg, IMF sees growth shift toward BRICS and away from G7 in new outlook. Okay, for Friday, October 25th, 10 a.m. Eastern Time, consumer sentiment. And then the annual meetings of the International Monetary Fund and the World Bank Group meet for the weekend. We could get some crazy debt warnings out of this shindig for Monday morning, so be looking for that. Tuesday, October 29, 10 a.m., October consumer confidence and job openings. Wednesday, October 30th, 8:15 a.m., ADP employment, and then at 8:30, GDP. Now, Thursday, October 31st, and Friday, November 1st, is a two-day atomic bomb window. All at 8:30 a.m. on Thursday, personal income and spending, initial jobless claims, and the Fed's favorite, the PCE index, the entire data group. Then on Friday, November 1st, 8:30 a.m., U.S. employment report and unemployment rate. These 2 days could easily determine the next interest rate decision by the Fed Reserve. As of today, we are only 11 days to the goofiest election in U.S. history on November 5th. Did you know our next Fed meeting is scheduled the 2 days after the election, November 6th and 7th? Did you know AMC will report earnings after the close on November 6th, and then Archer Aviation will report on Thursday the 7th, just after we get the rate decision? Uncle Frank's gonna need an edible, I think. Hey, I want to thank you for watching, and please remember to hit the like button after this slide if you enjoyed the presentation. Subscribe to the channel and set the alert so you're notified when I have new information to share. See you at the bell.